All right,
Got it.
action. Good morning, everybody. Welcome. It's Wednesday, September 6th, 2023. Welcome to the Lead Trade Live Trading Room recap and Master Charts Learning Reinforcement. The information contained in the presentation should not be construed as a recommendation or an offer to buy or sell any financial security or any financial instrument. Additionally, information contained in the presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attending the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, or any trading strategy. We're using real-time market data and we'll be executing trades in a simulated account during presentation. No offer on our part respect to the sale or purchase of any security is intended or implied. Nothing herein should be construed as a recommendation to take a position in the market. The intent of this information is for instructional purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk, and past performance is not indicative of future results. We make no promises, guarantees, warranties, suggesting that any information shared will result in a profit and not in a loss. You agree to not hold us legally or financially responsible for any reason. Purpose of this class is to recap the live trading room, kind of go over some of the things that we started with the pre-market routine this morning, okay? Some of the things that were announced before the market opened to help give us a direction and an idea where the market will be moving towards today. And I'd like to recap on many of those as we go through the list. Please be actively engaged in here, okay? If you want to use your mic, please unmute yourself. This is an open forum where we can answer questions and help each other out. But if you're not using your mic, if you could go ahead and mute it. And if you want to ask questions or share screen, just unmute and then request to show the screen, and we'll be able to answer the questions and help with anything there. I strongly recommend, collecting hundreds of picture perfect past trade setups. I tend to capitalize more on the trade setups that are profitable. Keeping my mind in the right direction and what I want to create, rather than focusing on all the losing trades that I may have taken. I do want to kind of reiterate that a little bit on that, is that when I'm trading, if I'm stopped out of a trade, I don't sit and go back and look and ponder and ask why, okay? I just move on. Now, that was a pretty difficult way. It took me a long time to get to that point, okay? Because I used to take every trade personally, like if I got stopped out, I did something wrong. Well, no, you just got stopped out. You manage risk by having a protective stop loss. Now, if you keep focusing on the trades that you want, the trades that'll make you money, okay, then you will eliminate the pictures that are losing trades. Now, there's still some things you can learn from those, okay, but not while you're trading, not while the market is opening and things are being put together, okay? Now, before you get to that point, collecting picture perfect past trade setups. I do want to give a shout out to some of the folks that are in the Discord room and what they've been doing here. And I want to point out a little bit about Steve's comment here this morning as he posted. I said, I've drawn over 24 charts waiting for something to hit, and it finally happened with Procter & Gamble today, okay? Can't wait to see how it plays out. Now, you may go through a period of time where everything is a setup, there's no trades, you're waiting. But you have to be prepared when when they start to trigger, they tend to come in waves, okay? Meaning that, in this example, 24 charts that he had up there, okay? Now, one triggered, you're gonna start to see many of them trigger at the same time. Now, this has a lot to do with how we view the markets, okay? 39% of a stock's move is directly correlated to the equity indexes, 41% correlated to the sector and industry, okay? So when the indexes are moving, okay, then the stocks and sector and industry, there's a rotation. Money's either inflowing or outflowing. But we do see a lot of times when we have several charts set up that price has not arrived at a zone, is that when they do arrive, it's like the gang's all here. Everybody starts, comes in to the party at the same time. Okay. Now, if you don't have enough capital to trade them all, then run a simulated account on the side, trade the ones you like, manage them accordingly, but then trade the simulated ones as well as if they were real trades, proper sizing and so on, okay, and taking profits. This is a great example here. I mean, I'm so excited about many of you are looking at stocks, FX markets. We have people all over the world right now that are contributing to the Discord room and showing their picture perfect past trades. Okay. And, I want to give a shout out to Steve and Trader 8 and who else here? We've got Dawn, Matt. I love seeing all of these. Okay. This allows myself to see.
What about mine? You don't like me?
Well, yours are not in the picture perfect pass trades. Yours are over here. Nice.
Default.
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 What the heck is all over that chart?
Oh, if you go back to like a lot before, you will see the perfect picture that when it started on the top.
Mm-hmm.
When we started at the top, all the way on the top, I said it changed to short. Much further, much up. Like it.
Very nice.
Oh,
I appreciate yours charts too, Ali.
Oh, colorful.
I know. Awful.
That's a rising sun right there.
Yeah, it looks like
one, the rising sun.
Oh, just the diversion. Look at the diversion between the. Look at the diversion. That made me do the short.
Very nice. So I want to open this up a little bit today. I'm going to cover a couple of things first, and then I noticed a couple of comments. Maybe I was going too fast, and not maybe I was going fast because I was going through a lot of different charts. Okay. When you see that I'm going a little too fast and too fast for you to assess and learn from, you guys need to interject. Okay. It's kind of like driving. I keep going straight until you tell me to turn. Okay. And the more I get excited about watching trades and seeing them play out, the faster I get sometimes. So everybody has permission to help each other out. And sometimes I just need a little help just by saying, hey, slow down a little bit. You're going too fast for me. Okay. And I want to make that clear for everybody. We do have the bank indexes still going lower and the VIX going higher. So I'm going to add, I've only got one micro on this from up here where we went short. I'm going to add one more micro as price starts to break down. And I'm going to come in at about 44.65 quarter. Just adding on to that position. The target in mind, and I want to talk about this, the target in mind is where we had the hedge that was put on, okay? So today's chart and today's pre-market routine set the stage for many things, okay? Since we had that holiday weekend where the markets were closed, okay? And we had a 3-day weekend there. about 3 to 5 days before that holiday, the banks and institutions start putting on some hedging for the volatility of the weekend and potential things that could happen. Okay, so they're hedged, basically closing up shop, and then once price comes back, they start to unwind those hedges a little bit. Okay. Often the first day back can be a little confusing because sometimes the futures trade during the holiday, but the stock market is closed. Okay. So when that happens, when there's a bank holiday and the stocks are closed, you use both days' data for assessing the pre-market. Okay, so you're going to use the holiday. If the futures were trading even a half a day, you're going to use the high and low point for that. Okay, you're going to combine them together as if they're one day. Okay, it's like an extended Globex session, if you will. During the first day back from a long weekend, there's often some choppy, very difficult trading environment going on as they're unwinding the hedge. This is why it's important to look back and find that Wednesday and Thursday area prior to the holiday. Okay, this is where the hedging was put on. Okay, a lack of selling. Okay, with more buy tickets here, price shot up. Now, as price moved away from this area very quickly and strongly, you can really get a lot of evidence that any traders that were down here that had orders pending, they didn't get them filled. Okay, so this is the area that we're intending price to come back to. Okay, it also happens to be a prep screen zone due to the time of day and increasing volume when the zone was created. Okay, so and today's action. Okay, let's bring in some information. We had the Globex range. Okay, was 17.5 points today. Now, why is that important? Well, when we compare the Globex range to the daily ATR, well, the daily average to range was about 51, 52 points. Okay, 17.5 points is less than 50% of the daily ATR. What this does is it allows us to speculate that today will be more of a trending environment. We expect to stay in trades longer. We want to try to use the information to not jump in and out, unless that's your trading plan. And some people do like to get in and out, but there are opportunities to stay in trades longer if you know the environment is providing that longer trading environment. Okay, so one clue that we talked about in the pre-market routine today was that the Globex range was less than 50% of the daily ATR. Okay, well, it's something that we can compare and we can put a measurement to. The second piece of information, price was gapping down outside the prior session's range. Was an outside day. Now, often that supports the longer term trend or move in price along with the Globex range is that when price gapping down outside the prior day's trading range at the open, we have a gap and run scenario. Most often the gap and run, okay, you can stay in trades longer. So there was several pieces of evidence to try to stay in the trade longer and also try to find entries to stay in the direction of that trade. Okay, so that pre-market routine and gathering some of that information, okay, and I just added on, I want to describe why I added on. Okay, we just added on another micro contract to the S&P position. Okay. We're also looking for that intraday trade to still see that price is moving lower. To the higher time frame zone down here, about 44.40 area is where I'm looking for. Okay, still trying to get there. But I need to find a way to get into that trade and capitalize on this last little move. Recently, we have been talking about using the BKX, which is the bank index. Follow the banks. The BKX, let's see if I can bring up some detail. This is Investopedia. Go out to Investopedia. Big banks, okay. This is a KBW bank index, okay. And what we want to do is get an idea of what it is, okay. Now this was developed, the stocks have been fantastic to run with the NASDAQ index, okay. We want to come and find out what stocks are in there and also get a detailed view of what this index is for, okay. Now, what we were told is just to follow the banks, okay, so this goes along with the NASDAQ related, okay, index, but a lot of the big banks that are in this are not part of it. Okay, here we go. I'm trying to find the right one. I wanted a definition. The BKX, the bank index is a benchmark stock index of the banking sector. Index developed by developed by investment banker Keefe, Brulette, and Woods. Okay, specialized in the financial sector, including the weighting of 24 bank stocks selected as an indicator of this group. Okay, so the list of banks that are the 24 banks are right here. Okay, almost like S&P or NASDAQ or 100 or Dow 30. It became an index. Okay, where the banks were moving money in or moving money out, became a very good odds enhancer. Okay, so I want to encourage you to go out to Investopedia, get an idea how long it's been around since 1991. Okay, the index includes 24 stocks from the regional and nationwide bank companies. Okay, the premise on this was follow the banks. If the banks are going in or the banks are going out, it's kind of like the tide coming in and going out. Okay, we already know a little bit about the tick. The tick for the S&P is the New York Stock Exchange, up ticks over down ticks. And we look for the extreme areas, where there be more down ticks and up ticks and so on. Okay. Now, we've been using some of this for momentum type trades. Okay. And recently we've started some discussion and some measurements on how to use the 1-day VIX volatility index, which we also went out to Investopedia to understand what that actually measures. Okay. I put a couple of moving averages on the charts and trying to assess this information, when to be bearish, when to be bullish, and when to expect sideways choppy action. Okay. So the BKX and the equity index, the many futures contracts, are correlated. They tend to be going in the same direction and trend. While the VIX is inverse correlated, going against that. Okay. So when the VIX is going up, that gives more fuel to the BKX and the S&P futures to continue lower. When the VIX and the bank index are going in the same direction, often we go into a sideways stall. Okay. Now, these are directional indicators. They're not a place where we take a trade. Okay. So these are just giving us road signs to say, yeah, the road, keep going straight. We'll tell you when to turn. Okay. slow down, we're going around the corner. Okay. There's a lot of time and insight on these, and also kind of a forecasting mechanism, because these are all stocks and we're comparing it to futures. Okay. The nice thing about trading futures is futures are a derivative. They follow a cash market. Okay. Well, what cash market? Well, we go back out to the stocks that are listed on the KBW, okay? And we could see New York Stock Exchange. Okay, most all of these are from the New York Stock Exchange. Okay, these are some of the bigger banks. Okay, so a lot of these stocks on the New York Stock Exchange, a lot of these stocks on the S&P 500 index, and a few of them are on the Dow 30. Okay. I haven't compared them to the Russell 2000, but I would estimate that they're not qualified to be on the Russell 2000, which is the bottom half or the bottom part of the Russell 3000 index. Okay. Most of these are pretty big, well-known banks, and they correlate highly with the S&P, NASDAQ, and Dow, more over than the Russell. Okay. Because you have more pieces. Okay. So how do we use this? Well, when to keep driving forward, but slow down. When the BKX is below the moving average, indexes are more bearish. S&P still moving to the downside. VIX above the moving average, supporting that move. Okay. Now, when things start to get a little bit congested, okay, is when price goes above the moving average and the VIX is above. Then we start seeing some of the sideways action. What I'm looking for and assessing at this time, and need help studying this in observation, is what's the best time frame to do this, to stay in some of these trades. If I can take 1 or 2 trades a week and using this information on 1 micro or even 2 micros, okay, and keep in mind with TradeStation, the intraday margin rate is only about $123 a contract on the micros. Okay, having 2 contracts, that means I'm using $250 worth of working capital to make $233 at this moment in time. Okay, not a bad way to go. You double your money, maybe an opportunity for you to get out, okay, or take a profit. During the lunchtime doldrums, this gets a little frustrating because of the back and forth nature of it, okay, and how close it is to the moving average. In observation, you must use whether you're going to take action when price closes above or whether it trades above or below the moving average, okay? These pieces of information do not make the trade and do not help you execute the trade and manage risk. They just tell us what the environment is, okay? As you can see, both are dancing really close to that moving average. Now I'm using an 8 simple moving average on this, okay? I do want to continue in the trade, staying in the trade in the direction. So I can look at some outside influences to see whether futures are overbought or oversold relative to cash by using the Dow 30. Okay, getting a bounce on the Russell. Okay. All right, so right now I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 down stocks negative, 2 positive. Net results 9 negative times 2, 18. Right now, the S&P futures are oversold by about 18 points relative to cash. Okay. So what that tells us is things are getting a little more risky to keep going short. So back to the chart on the BKX. As long as we're still below, I'm feeling that, you know, I can handle that risk. Okay. And as long as the VIX is above, we're still staying short. Okay.
Okay.
Go ahead, Ellie.
I said I was talking about the ES, not the Russell on the 4462 to 4463 is the zone there to get out, and I would get out if I was you, and then wait to retracement.
Okay. I also want to point out one of the pictures.
Russell, so the Russell got to 127 point already, and I'm waiting to retracement to 32 to 61.8 at least.
Okay. So in using that information, okay, I want to assess kind of what's going on this price chart. Okay. Should I be expecting a potential reversal and going back up? Let's just use the price chart and information that we share in the Mastering the Charts course. Okay. So I'm going to draw some pivot points, just using swing highs and swing lows. And we teach you how to use pivot points, and especially structural pivot points, so that we can get a picture of that zigzag. When we start to anticipate a change in direction, very often we'll make the lower low first. Okay. Now this is right out of the Mastering the Charts course. We made a lower low. Okay. And then price bounced up. Once you make that lower low, you want to look up and you want to find your resistance area. Okay. Map out where the sellers are at. Okay, so making a lower low, a potential turning point in the market. Okay. We then know how to splice into this. This picture also building what could potentially turn into a fresh accumulation of buy orders. Okay. So having that resistance area and then mapping out where price may change direction is once price breaks above, okay, then comes back down to a demand, and we have our supply and demand. Okay. But as this is playing out right now, we have potential like inverse head and shoulders. Our trade opportunity would be taking the breakout while looking to the left and saying, okay, there's not a pocket of points or a dead space. There's kind of a really congested area, which we call a speed bump. Okay. So now we're assessing the risk for taking the trade at the breakout. Okay. See, using this level down here as a zone, okay, this is not a zone. I need the information to the left-hand side of the chart. Okay. So as I'm pondering to take the trade long, I'm also monitoring that, hey, the bank index still below the moving average. VIX is above the moving average. Okay. See, I may have had an opening to merge into the traffic and going to the long side. But as I was on the on-ramp coming into that traffic to merge, somebody else took my spot. Okay. But this is kind of what we're doing right now. We're trying to manage a trade we're in. We're trying to stay in the trade until proven that it's going the other direction. In order to start a new uptrend, I do need a fresh accumulation of orders, or I need this pivot point here to have dropped into a demand zone. Okay. See, we will have trades where price drops into a demand zone and we can take the entry going long off of that pivot point. If there is no zone over to the left-hand side where we have a leg base group of candles and a qualified area, then we have to wait for a fresh accumulation of orders. So what does that start to look like? Well, if you're going to build a fresh accumulation of buy orders, price will make a lower low first. Once you have the lower low in place, you look up and you start looking for your 3 touches of resistance. Wait for price to get your 3 touches if they're not there. Okay, and then once you have the 3 touches, you can then participate in the breakout. See, as we are watching the potential of a reversal being manufactured, okay, we need to visualize the 2 to 3 or 3 to 4 swings to the right side of the chart. What would a picture perfect trade setup look like? Okay. Having just a leg base group of candles down below here, this is a pivot point. It is not a zone. We don't have enough information whether the zone should be looking at the upper 2/3 or lower 2/3 for the pullback. Well, all we're doing now is speculating, okay? And after all, we could come up and find some more sellers. But in pre-planning for this and using some odds enhancers outside the price chart and the time of day that things are going on, I see no reason to get out of my short trade at this moment. So I'm walking you through some of the things that I see on this, okay? So I'm not discounting anything that anybody else is telling me. I don't want you to think I'm trading against them, okay? It's just I'm using information outside the price chart that I'm studying and documenting, okay? I can take a profit anytime if I'm not going to be waiting around, okay? But since I am looking at the bigger picture and targeting that 4440 area in the context of a downtrend, I want to stay in a downtrend until I'm proven that this is a fresh accumulation of orders and prices changing direction. Okay.
When would that be? Would that be a breakout above the 69?
That's correct.
Okay.
Yeah, because now we've made potentially a lower low. And at the moment, a higher low. Okay, isn't that common with what we look for in a reversal pattern?
Kind of rounding in a inverse or a
Yeah.
reverse HNS.
But for me to go long here, I'm taking a lot of extra risk. It's not in a zone. Okay. This was not a zone entry for that pivot point. Okay. And in recognizing that, we have to realize that if this was not a zone where you could have gotten long at that pivot point, then a fresh accumulation of orders must be built. Okay. When that fresh accumulation of orders is being built, often we make a lower low first, and then we make a higher low. Anytime you make a lower low or a higher high, look up and left and find your nearest resistance or support area. Okay. See, in this example right here, okay, just up a little bit higher, we had a price pattern, whereas we made a higher high. Okay. Once we made that higher high, we looked right down and we found that support. In order to take a trending trade in a supply zone, I would need price to return back up to that. Okay. But the breakout trade was available. Okay. So higher highs, lower lows, okay, are often the signal, hey, things are getting ready to change. Okay. It takes time during a corrective phase to create a fresh accumulation of orders. Okay. So in order to stay with the trend, and as we observe a trend change, what are some of the things we're looking for? Okay. Explain why the pivot is not a zone area. Great example. Okay. When we know the difference between what is a pivot point and what is a zone must be created above or below the resistance or support location. Okay. This point right here, I would have to go all the way over to the left-hand side of the chart. And see if there was a zone in it. Okay, no zone. Where is my qualified zone? Well, after I have more than 3 touches of resistance, I have a buy territory zone located in the buy territory. Making a higher low, it's going to be in the upper 2/3, step, step, step. Okay. So the area where the dotted line is right now is just a novice trade where some traders are saying that's that rally base rally thing. Okay. But rally based rallies can often be located in the wrong place. Okay. There's no evidence over on the left hand side of the chart showing that this is a high quality area where we've had 3 touches of support, price break, or sorry, resistance. We see that the area that is qualified is down here where they started building that position for that move up. Okay. So each of these buy territories, there can be zones located in them. Okay. I would say somewhere in here, we made a higher low and also right in this range. Okay. In here, we made a higher low before the breakout. We would be looking also right around this area. Okay. None of these areas have been touched 3 times, so they're buy territories. Okay. Price is currently here at 44.62. Okay. All of this action that was built up last week ahead of the long weekend. Okay. So these are zones. Okay. Now, when we look at a picture on the price chart, okay, and let's use this one for an example. And for those that have taken the mastering the chart, okay, is this a zone here or is it a pivot point? Right here, zone or pivot point? Okay, that's where you guys type in the chat. Okay, Ron says zone. Okay. It's a zone or a pivot point, right? I have marked right here. Well, why did price stop right here? Where would I find the answer why price stopped here? I'd have to look left, right? Okay, so as we're coming in, it was a good question. I'm glad you asked that, okay? But notice in this chart, we made a higher high, so we're going to be in the upper 2/3 of that channel, okay? So we're looking at a leg base group of candles somewhere right in this range in here, okay? Leg base group of candles is where we find the zone. So this would be a pivot point, not the zone. Okay. And if you look at the difference, okay, a pivot point, we did not have the 3 touches of support right here. Okay. In fact, we had an area where we had some buyers come in. Price broke out right into the sellers. Okay. So when we're looking at the difference between what is a pivot point and what is a zone will have all of this information over here along with it. Okay. Zone. What else could this be? Or a retest See, knowing the difference between a pivot point and a zone will have all of this information. A pivot point did not have that. Did that help? DM? Okay, so as we are looking down below, this area was not a zone. It was just a bounce off of a little support area, okay? So we are still seeing price go a little lower. We have made that higher low, but we still haven't finished a fresh accumulation of orders to change the trend. We have the possibility of changing the trend. We have made that lower low, which is our first indication. In order to splice in and get comfortable with the new uptrend, we will look for price to break above 44.69. Okay. Now, having said that, is today's action based on what we collected in the pre-market, price gapping outside the prior day's trading range and an outside day, is it possible? Well, is it probable, higher probability? Yeah, probable. Okay, that we're going to go back up and fill the gap. Or is it less probable because we're outside the prior day's trading range? We gapped outside at the open, and it's an outside day associated with a gap and run. Okay. You see how we're putting a lot of these pieces together, and they're not opinions, they're things that we're documenting. Okay. Just as we're still in this trade short, using the bank index never got back above and the VIX never got back below. Teased it a little bit. But what should be my opinion on this? Stick with my short trade, right? Until price arrives at a demand zone that's qualified. Ooh. Now, I'm not saying stick with it after only looking at it one time. I'm taking a lot of time to describe the details in this, okay? I want you guys to be able to see this, but I want you to pull it apart. The questions that you're asking in here are tremendous, okay? They allow me to help you see the picture a little bit better, okay? Now, if the markets are going to continue going lower, could we use the dollar currently and anticipate that the dollar may still want to go higher? What's that picture on the price chart that the dollar's doing? No, it's kind of going sideways, but it is kind of that high tight base. Strong impulse wave. Okay. So if the dollar moves higher, supporting the move lower on the equity indexes. See, so many people just focus on the price chart and going long and short, and some are really good at it. Okay. I find by using information outside the price chart, okay, that it helps me stay with the trade longer. Okay. Now I'm doing all of this on the S&P rather than the Russell. The Russell is kind of on its own. Okay, it does its own thing. But we could still look at the price chart, and they do like to travel in the same direction most of the time. This morning at the open, Russell had its own mind. It was going up. Okay, and the Dow was and the S&P were going down. Okay, and the NASDAQ was still deciding because it was an inside day. Liz pointed out earlier, hey, watch that NQ. We're right at that 50-day moving average on the daily chart. Now that is some tremendous information right there that the markets are starting to turn more bearish. Now, if the markets are starting to turn more bearish and the S&P is definitely below the 50 moving average, NASDAQ is starting to get below the 50 moving average. Let's double check the Dow. Oops, I don't want that one. Dow is below the 50 moving average, okay? Things are starting to turn a little bit bearish again, okay? Now, at the end of the trading session, if the Dow looks to close below the in the S&P below the 50 moving average on a daily chart, this is just reaffirming that there are more bearish conditions coming. Okay. So there's a lot of evidence for me to say, I'm going to hold on to this trade, and here is why. Okay. I'm adding on to this trade. Here is why. Okay. We potentially started to build a fresh accumulation of orders. Okay. But right now, it hasn't proven itself that it is a fresh accumulation of orders, and the trend has changed. Okay. Okay. What's going on with CL? Oh, look at that. A bullish VWAP. That's nice. Nice little move there. So any questions on that? Any comments? And then I'll finish up a few things here. Hopefully that was very descriptive for you. Hello, iPad.
Hey, hi, Jeff. This is Hamid.
Hey, how are you doing?
Hey, how are you doing? All good? Hey, Jeff, a question on the target setting. Do you use the same time frame, or do you go for a higher time frame?
On what? Say the first part again. What do I look for?
When you want to set your target, right?
Mm-hmm.
You could either stick to the same time frame, which is fine, but I've recently started exploring higher time frames, especially if you're on a trade that is promising. Then you would look at stuff that would say, okay, my trade ends here, but it makes more sense on higher time frames. Any view on that?
Okay. A lot of my zones, I turn down the time frame or turn up the time frame in order to get the leg base group candles.
Right.
So I could start off here with the daily chart on the S&P. Okay, where we have the same example. We've made a higher high, we've made a lower high. I'm
Right.
looking for the possible change. So once we made that higher high, I looked down and found that pivot point. Price came down, tested it once, twice, this is the third time. Okay.
Mm-hmm.
All right. So I'm expecting my next opportunity to take a breakout trade of that support on a daily chart.
Mm-hmm.
Okay. In order for price to get down here, if I'm going to participate in a trade, okay, price has to move from where it is now down to that breakout point.
Right.
So as I see price rallied up, it based and now it dropped. Okay, so let's start dropping this down. I'm going to go down to a 240-minute chart. Because I still want to play the downside. Once it hits that support, I anticipate it to bounce back up and then a break it. So going down to a 240-minute chart in order to play to the larger time frame zones. Okay.
Mm-hmm.
One of the first things I would look for is it potentially time to look for that reversal. Did I make a higher high?
Yeah.
Okay. So I made the higher high. I look down. Okay. From that point, and I want to find any support area. Okay. So I can see that we have some tails down in here, but not enough detail at the moment. But the higher high told me to look for any place that I have that support. Okay. one 20-minute chart. Okay, one 20-minute chart, we're getting a little more detail. 90-minute. I want it to look picture perfect, okay? Okay, so on a 90-minute chart, I can now find an area where we had 3 touches of support, and then price broke through. Okay, so that's fill color, that's gonna be green. And since price moved through that, I've already missed my opportunity to take the short breakout trade.
Yeah.
Okay, so I need price now to come back up to the sell territory. And in that sell territory now, I need to find, well, I need to draw out my zigzag. Okay, so basically price came down once. Whoop. Actually, I'm not seeing, oh. I see price ran up, then came back and tested it once. So if I'm not getting the right picture, what can I do? You see,
Change the time frame.
yep. So I'm struggling to get the exact right picture. So I'm gonna drop down to a 60-minute chart.
Mm-hmm.
See, I want to take any of the fuzziness out of this, okay? We want and need the details in order to get everything aligned in our psychology that this is a safe trade for us to participate in, okay? And even on a 60-minute chart, I'm still getting I got a few details a little bit better. Let's drop down to a 30-minute. I know we're still focused on the large time frame, okay? But now
Why you don't use the tick chart at all, Jeff?
why am I going to it?
Why using the minutes all the time, like everybody else, but not using the tick chart?
Because most people have the time-based chart. I'm not trying to set up a trade at this point. I'm trying to follow through with the process to get the picture that we're looking for on this chart. Okay, and the steps. I mean, we're expecting price on a large time frame to go down to that support. Okay, but in order to get into that, I start with time base, and then if I still can't find the right picture, then I'll change it to a tick based chart. Okay.
But it's not better that the big guys using the tick charts usually, and the rest of the world using the numbers, the minutes.
And
That's the way I look at it. I don't know.
No, it's a valid question. But the question was, you know, which that iPad was using was, you know, how do I basically using a larger time frame, which I agree with him. Okay. Using the larger time frame, how do we splice in to that move to the downside? We on a daily chart, we have to wait till price gets way down here before we have back at support. Okay. But it's going to make the same pattern to get down to that point. I mean, we have sellers, support, and in order to, and since we made like a lower high, we'll look for a zone where we have a leg base in the lower 2/3. Okay. So now I take all this information and return to my daily chart. Remembering my goal was taking the breakout on the daily chart down here at 43.45. Okay.
On a
Coming
W.
down to a daily zone 41.52.
You
So,
created a W. It was created a W there.
correct, so. How would I splice into it? Now, in this example, I had to go all the way down to a 30-minute chart to get the information in order to participate in that move down to that other support. So we missed the breakout trade and we're not trying to get in, just jumping in right now, okay? So if I have an opportunity to participate in this, then the picture price must go back up to the supply, the origin of the move. Then we can splice in. Okay. So it's being very descriptive and detail on the process of getting in a large time frame. You may need to go down to smaller time frames to get the right picture in order to participate in it. Now, the smaller pictures are going to cause less risk as well, dollar-wise. Okay. So as we're describing this, we now made another lower low, correct? As we made a lower low, I need to prepare for a reversal. Looking at BKX, looking at VIX, do I need to be concerned about a reversal yet? What do you guys think?
Get ready
No.
for retracement.
No, I think you can keep going.
It will keep going, but it will retrace for 30, 32 to 61.
Well,
Somehow, sometimes.
and there's nothing wrong with getting out, okay, but as soon as I recognized we made a lower low, I looked up and found my resistance area. We have not yet started to build a fresh accumulation of orders. On a larger time frame, I'm looking over to the left and we have not gotten down to the area. In fact, as we do come back out on the S&P on a 30-minute chart, what could we be using as an additional odds enhancer over here? Okay.
Pocket of points.
A pocket of points. See, there's nothing in the way. Its prices keeps going down. We're not in a pivot point, okay, or a zone yet. Okay, so as we continue lower, we want to find areas where we potentially could have a small time frame zone. And we're going to look for where we have the 3 touches over here. Okay. Okay, now I had my 3 touches over here. Price broke out a little bit, came back into the zone. So I do have a leg base down here, and I would have to say that that is a tested zone. Can this zone be used twice?
I can't really see it that clearly, but I think the leg outs are bigger. Is that correct?
Mm-hmm.
Yeah. Mhm.
Okay, so if I change to like a 29-minute chart and come back over and look at that, you're getting a little more detail, okay? I want to find that leg base group of candles, and if the leg candle leaving is bigger than the one leg candle leaving bigger than the one in the zone, okay, then we have a proximal line entry first, and then price goes deeper in the zone second. See, all of these are documented clues. Okay, we're trying to find a demand zone. Okay, we see that we're in the middle of a pocket of points and there's a little wick over wick area. We may pause right around that area. Information outside the price chart says, forget about it, let it fall. Okay, the banks are not moving money back in yet. Okay, yeah, they got to bounce back up, but nothing above the moving average. Let it keep going. Your opposing zone is down below, okay? And the VIX has gotten pretty strong. What time of day is it? See, all of these things that I'm going through are like checklist, okay? What am I looking at to anticipate staying in this trade longer, okay?
Dollar is going down, banking is turning to the upside, VIX is going up, get out of the trade.
Well, the VIX going up is more support for it going down. Opposite, inverse related.
Yeah, but you have the dollars going down and the banking going up, and the VIX made a red candle.
Okay. But dollar is moving down in the last 5 candles, but we just now see and that's why I'm using a moving average on the dollar too, is to help me see when things are changing. I mean, now it looks like the dollar is pushing now against that 5 moving or that short moving average. Okay. Once it starts to get back above it, does that mean get out of the S&P?
No,
Okay.
because if it's gonna move up, the S&P is gonna keep going down.
Okay. Should I expect a little bit of a pause and some sideways action right now?
Yeah, because of that time
And
of
a small
day.
retracement, that's what I'm waiting. And getting again to the short.
But see, the more times that I get in and then get out, okay, I'm exposing myself to more risk. See,
That's right. That's what happens to me. That's exactly how I lose my money. I get out and I think I can get back in. And then I lose it because I get stopped out again.
But it's
So
not nice to be,
know-
he has 2 contracts, get 50% out and leave one and get in if you can. If not, you got the 50% in your pocket.
well, that's. 50%
Coach,
of
I
$3
caught you both.
is.
I caught you both.
No, it's the commissions too. I mean,
Come
those
on, it's
commissions,
$300,
well, for me,
150 in your
Ellie, for me, it makes a big difference because I don't have a large wallet. And
50
so,
cents will make a difference.
no,
50
Well-
cents each way. 50 cents, $1 on you take 150 in your pocket and you leave 150 to run. And then if it goes back, you had the $1, the one contract again.
Well, one of the things we're trying to do is take the chancing of that out. I mean, right now I'm looking at the information on the price chart and trying to equate it. Should I jump out now? Our large time frame said, no, your zone's down below and you're in a pocket of points. You're smooth sailing, okay? Every once in a while, you're gonna get a little bump, a little wave is gonna come by and we can say, okay, waves come by about the wick over wick area or an old resistance area. But when a big wave comes in to change the tide, that's gonna be when it comes down to the demand zone, okay? And then once it comes to that demand zone, then I will start to look for that change. Okay. But right now, as we've viewed, okay, this whole pocket of points, there's really no reason to jump in and out. It's just to stay and ride it. Now, it's okay if it's your trading plan. But when we're trading just a couple of micros and you want to see, well, how do I stay in trades longer? Because the same principles, okay, for what we're doing right now, apply to the larger time frames, okay? And myself included, I get in and out of trades too often, whereas when I look back and I go, well, all I had to do was go short yesterday and leave that one contract on and let it go all the way down. I could have made a lot more money than going in and out, in and out, in and out, okay? Because one stop out or 2 stop outs reduce the amount of profit. Where if I have one trade and I have other places to add on to that, okay? Now, I'm not gonna dictate anybody's way of trading, but at this point in time, we used evidence about a gap and run. We also looked to go back to the 88.6% retracement on a daily chart, that 44.48 area, 44.30 area. This is also a little wick over wick area where the banks hedged for the long weekend. See, there's overwhelming evidence for me to not get out right away. That this thing is still going lower. we're starting to see the stocks stack up. Okay. The market is changing here to a little more bearish. Okay. There's more people trying to get out of their trades right now from the last few days run up. Taking a quick look at the, where we started running up last Thursday or last Wednesday. We've done more than a 50% retracement, haven't we? We're probably pushing a 618. Actually, we're below it. So 2/3 of that 7-day or 5-day move up is gone. So anybody that got into a trade up here is now way underwater. And all they're doing is looking at their P&L. The road signs that we're describing here, large pocket of points, okay, imply that price should continue to go back through that area. We can find that evidence on the price chart over and over and over again, where we've had big drops in price and then price goes right back through it, okay? These areas where we call pockets of points, okay, a strong move in price. When price gets back into that area, they typically go back to the other side, okay? So here's a strong move up. Once price got into that dead space, boom, strong move back down. Over and over again, we see that behavior in the marketplace. So once we start recognizing that behavior, we can stay in the trades a little bit longer as price going through that pocket of points. And if that pocket of points happens to be a dead space also, we see the move accelerate, okay? Now at any moment, and see, this is part of my dilemma too, is if I had already been stopped out of a few trades today, and now I'm showing green on the screen, I'm ready to take my profits and get out. But I'm still haven't made any money on the day. So how does that make me feel? Okay, break even and I've been working all day. That's not good. Okay.
That's how I feel today.
So staying in a trade for the length of this, a lot of us desire to do that. Each time we find our little support, we can see where the leftover sell orders are at when price comes back up to it. Where we have resistance is where we met sell orders and kept pushing price down. So anyways, for me personally, I'm trying to develop a case where I can trade less because I'm doing a lot of teaching right now and covering and things like that. So I don't have the luxury of getting in and out and doing a lot of day trading in my account. So I have to get into trades where I can get in and stay in for a period of time. And, if I have to get out, it's going to be when a trend changes. Okay. Boy, NASDAQ's doing the same thing. And we're starting to see, as we were pointing out earlier as well. Oh, where did the chart go? There it is. As we're watching the dollar, okay, and the dollar starting to base, I also want to make reference to the other FX markets. Because as the dollar decides to go one direction or another, we start to see that the FX markets are starting to base out. Particularly interested in the Aussie dollar. Okay, as it's making a fresh accumulation of orders right here, we made a slight lower low and a higher low. I just got to find a way to break into this. And then I also see that there's nothing in the way going all the way back up to resistance. Very similar thing get about ready to happen on the 10-year. Okay, on the 10-year note. Okay, price coming back down. We had that pocket of points. Look, it's filled that pocket of points, and now I'm going to need to turn the time frame down to get the leg base. Let's go. Break down to smaller time frames here. Oh, Facebook coming out too, okay. Oh, there. I'm looking for the leg base group of candles. We made a higher low, so it should be in the upper 2/3. Okay, but this is quite a mess right here, and I'm not finding my leg base group of candles. So I'm going to reduce the time frame to keep looking into that area. The reason we chose that area is we had more than 3 touches of resistance. We have a buy territory that's been established. And we got a leg base group of candles. And we got that small zone, but we also have a larger zone. Red leg in, base, leg out. Okay, so it's kind of targeting basically that area right here. Okay, now when I have 2 zones, a zone inside of a zone, which one do I choose? This is very big piece of information. Okay. See, when I'm looking at the leg candle leaving the zone 1, which is the smaller zone, the leg candle leaving that zone is bigger than the leg candle in the zone. The lower one, it appears that the leg candle in the zone is also smaller than the leg candle leaving the zone, okay? So the first test of this area is going to be a proximal line entry. This zone can be used twice, and I have to expect that price could go deeper in each of these zones, okay? So in assessing that information, I would have to determine, do I want to accept a risk on a trade going from 109.16 to 109.03? Okay, or I can wait for price to enter and then start to turn out. I may miss the trade at that point, okay? If I'm going to set it up ahead of time, I want to make sure that I have everything in line over on the left-hand side of the chart. Is my zone in the right location? Since we made a higher low before price took out all of that resistance or sellers, okay, we're going to be in the upper 2/3. I'm going to target that 109 and 16 64s. Okay. Looking for that entry right around that area, and I'll use the 109 and 9/64 area as my stop loss. Okay. So if the bonds are going to continue to go down, what would the equity indexes do? Are the equity indexes and bonds going in the same direction right now?
Yeah, they're going in the same direction right now.
Mm-hmm. Okay, so we're the same thing on the ES on a daily chart, or sorry, on a back out to a 60-minute as well. Price has not yet met that support or the zone. It still continues to move through that pocket of points, looking for buyers. Okay. Still looking for buyers, and we're still making a lower low as price continues to come down. Now, I'm fully prepared to go long in that demand zone. Okay. If I'm going to go long in that demand zone, I want the bank index to be 1 or 2 bars closed above that moving average. And I'd like to see the VIX getting back below that moving average. So I'm planning to go long, and I know what road signs to look for in order to go long. And I'm targeting this area here, which we've already discussed before. Okay. So
Jeff, could I ask about that 10-year? Could you run a 88.6 fib on that too? Is that the type of situation that you would
You can.
Does
It
that
gives you
end
a-
up being close to what you've come up with?
Mhm. So I can put the 88.6 on the. So, yeah, it comes in right about 109.11. That's from the
Okay.
lower one.
Yeah,
And if we do another parallel, which you can overlap, okay? We come up with a range where the Fibonacci guys will come in. Okay, so I'm using the distal line to the rally, distal to the rally. And with the Fibonacci people coming in, we're looking for a wider range. Using a leg base group of candles, we've said, hey, this should be a proximal line entry or bounce, which is targeting an area inside of where the Fibonacci confluence would be. This whole range down here, we're going to start to anticipate that there are some leftover buy orders in the buy area and looking for that opportunity to trade this back to the upside. Okay.
okay, thank you.
Coming back for a few more highlights, a lot of the things I discussed today, talking about the economic reports, the correlations, inside day, outside day. We talked a lot about trend and reversals. Okay. So much of this information is covered in the Mastering the Charts course. Okay. Training your eyes exercises are trend and trend reversals. Okay. When to expect it. And we talked in great detail about looking for higher highs and lower lows to signal us to look up and left to find resistance or support and anticipate a fresh accumulation of orders to come in. Unless that move down or up intersects with a demand zone or supply zone, okay, then we would have a trade immediately. But if it's not going into a supply or demand, then a fresh accumulation of orders must be put together in order to participate in the markets. Our prep screen gave us a lot of information. There were some additional things. We talked about the 50 moving average on daily charts, especially the S&P, NASDAQ, Dow are all below the 50 moving average on a daily chart. Often this is bearish environment for retail traders. Bearish environment this time of year adds fuel to the fire where we're looking for a down move in the market. Okay. We had some other prep screen setups. And a recap, and we did have some really good little trades here. Okay. Crude oil, we got the open range breakout to the upside. Where we took that trade long and I flipped it over, came back down, and I did get stopped out on that one. Okay, but there was a little bit of still sell orders. Okay, now price going up into that area, we look left and we can see that there was a support area and a leg base group of candles. All of that was present, and there were some leftover unfilled orders. There were not enough orders to change the trend at that point in time. A short trade on the S&P 500. Okay. We entered back in the trade. We also had a contract up at top where we got into it. Okay. Price moving down. Okay, our wheat trade that we got into yesterday, as price dipped back into that demand zone a second time. Okay, actually that was a Fibonacci extension. This goes back to iPad's question. See, what I'm trading on wheat is the larger time frame. I needed this smaller time frame because I couldn't risk the money going into it to splice in. And so I waited for the opportunity for a fresh accumulation of orders. So bringing up the wheat chart and reiterating information that we were sharing today, okay, is we had some Fibonacci price extensions that came down here. But then to anticipate that fresh accumulation of orders that was coming in, okay, is once we started making lower lows, I looked up and left and started finding my resistance. Soon as we started making higher highs, gave me the opportunity to take the breakout trade and see the change in trend. Okay. All of this now is building a fresh accumulation of orders. Okay. I do have my 3 touches going across the top here. And you can use a leg base group candles over there. Okay, to help you size that. Resistance once, resistance twice, resistance 3 times. Okay. Now I'm looking for the breakout. Going into a dead space. We're looking for this larger time frame trade to play out. On a larger time frame, we did make a lower low. Okay. And now we're moving up, potentially making a higher low. See, we're blending the same picture into from large time frames down using the smaller time frames to splice in to the larger time frame potential move. Okay. Just as we did on the S&P here, we started off with a daily chart saying, hey, that looks like a head and shoulders pattern forming. So everybody, including Aunt Martha, is waiting down here at 43.45 to get in short. Okay. We had to break this thing all the way down to a 30-minute chart to get the right picture to find out, well, where could we go short using supply and demand? Where could we go short taking a breakout trade? Okay. Swing. All right. All right. How many times you tell me to get out, Ellie? And I'm going to give back all my profits? All right. And see, look at the bank come down. We're starting to pick up some momentum. We're right at the top of the hour, but we're not in a zone. We still could change direction, but right now we're still doing well. Now, I do want to remind you there's only $250 of working capital on this particular trade. $123 a contract in TradeStation. TradeOvate, you would be using $100 of working capital or $50 a contract on the micro S&P. Okay. So if you could hand your buddy market over here $100 and they give you 383 back on top of your $100, is that a good deal? Okay. So price has not intersected with the demand zone yet. All indications are showing that this still should be going lower. Okay. The time of day, we can anticipate the turn. Okay, or a bounce. But I'm not even really expecting a bounce at this point because of where the bank index is at.
Just an FYI, we
Yep.
have now retraced 50% from the low to the high. 50% usually get a bounce off of 1 o'clock in a couple minutes.
Awesome. But see, what I'm hoping you guys understand is that there's a lot of information outside the price chart that traders only get from being part of the market. Okay. And the information outside the price chart, when we do our pre-market routine and we gather this information, okay, that information outside the price chart helps us and understand to stay in the trades longer. Okay. See, when I took the Russell trade this morning at 1891, okay, I got stopped out, but then came back in and went short. Market conditions were still leaning short. I took profits on this trade for about $96, I think. It actually ended up 43 covering my short. Okay, but I think it was 96 when I closed it. But there was no way for me to get back in using a time-based chart. Now, a tick-based chart, you might find ways to get in. Now, even dropping this down to a 500 tick, okay, there was a place where you could take the breakout trade below 1880. But if you took your profits, you're still waiting for either price to hit demand or you're waiting for price to come back up to supply. There has been no other basing here for you to splice into the trade again. Now, that doesn't mean you cannot do it. It's just that if you have a rule-based, systematic, step-by-step process that allows you to execute on your trades, which is what we teach, okay, either a breakout trade or a supply and demand trade, okay, that's what we look for. We're not just capturing pivot highs and pivot lows and stuff like that. We're looking for very specific parameters to execute on a trade, okay? Even if price moves back up, I don't have any support area, okay, or a resistance area, again, to take a trade back to the upside, okay? Now, again, price coming back down to demand, we could look for the trade from there, okay? All of this that we're going over, again, okay, is really specific information. All the information is over here on the left-hand side of the chart to help us anticipate where there may be some leftover orders, okay? And finding those little tests of resistance and then looking below it for the leg base, okay, are those places that we could look for, okay? We got the 1 o'clock hour coming up, as Chris just mentioned, okay? BKX is still going lower, even though we got a little bounce, a couple of people short covering. The dollar is still basing over here. And the VIX still starting to climb. People are starting to get some of that panic. Okay. But we haven't seen the exhaustion move down yet, have we? And if we start finding the lower lows, okay, we can start to anticipate, okay, and especially since the market has been moving down quite substantially off that high, okay, we need a big exhaustion candle where we get a bounce back up and leave a tail. That has not been seen yet. And we're seeing evidence over here on the left with the BKX and the VIX that we should still stay with this trade short. Okay. Whew. Boy, that was a long 90 minutes there. We didn't get too much outside of our screens over here. Okay. So a couple of takeaways. The equity index were bearish as the US, Russell, YM started off the session as an outside day. Outside days, look for trending market conditions. Outside days where the Globex range is less than 50% of the daily ATR, we can add that to that now as well. Outside days where price is gapping out, we look for gap and run, okay, or short breakout trades, and look for the sell zones for pullbacks. It was a great session, okay? It was a really good session, and I like that everybody participated in that, okay? And get ready to take this thing back up towards the end of the day, okay? As price starts to approach that prep screen zone, you may have the opportunity to take this back up. I mean, after all, this is a light volume pullback, okay?
We're also now down 100 points.
Okay, so we're also getting an average swing where we've seen that 100 points down. Okay, we often get a bounce, don't we? 88.6% retracement. Next one is at 44.30, 44.40, 44.39. All the details are there to look for a fresh for some buyers to come in down here. All right, I'm going to wrap up this session so I can do some trading, and I'm going to catch the bottom down here and look for it to move back up. I'll be over in the Discord room and we can continue this session and a little more less formal. Thanks everybody for joining us in the Mastering the Charts review and recap. We'll see you tomorrow in the Mastering or in the Discord community trading room.
Thank you, Jeff. That was a great lesson today. Thank you.
You're welcome. Have a great day, everybody. Bye now.